Hello, welcome to my YouTube channel FinPulse with Ruby. So in this video, I am going to discuss about the basics of accounting in simple language. So my target group is the professionals who are coming from different backgrounds, from different fields, and people who are just the beginners in the field of accounting and finance. So my whole objective is to give you a good foundation to this field and give you good understanding about what is the concept of accounting and bookkeeping. Even though these are basic concepts, but these are very important because if you are going to start your career in the field of bookkeeping and accounting, these are like payment blocks of the field. So join with this video and get a good knowledge about, good understanding about these basic concepts, which will help for you to have a better understanding about the future concepts that we are going to discuss in future. So this is going to be a series of videos. I'm planning to do few more videos on these concepts until you get a good understanding about how to prepare financial statement. So these are the content of this video. I'm going to discuss what is bookkeeping and accounting and the purpose of accounting and who are the stakeholders of a business, and two categories of accounting information and the different forms of business in today's business world. So these are the contents that I'm going to discuss in this video. Let's move on to our next slide. Okay, first we'll see what is bookkeeping. Bookkeeping is the process of recording the business transaction. So here we are considering only about the business transaction and not the personal transaction. Let's assume that you have sole proprietorship. So you purchase a laptop for the use of business. So it's going to be a business transaction and we are going to record it in our books. But if you purchase a laptop for your personal use or for your family member, it's not a business transaction, it's a personal transaction. So we are not going to consider it in our books of accounts in our business. Now we'll see what is accounting. Accounting is recording business transactions, analyzing and communicating financial information for the users to make decisions. So you can see clearly that bookkeeping is a part of the accounting process. That's why I have mentioned plus mark here for you to understand the difference. So what are the two types of reports that we make for the users of the decision makers? There are two main types of reports. One is management reports and the other one is financial statements. So management reports are for the use of internal users and financial statements are for the users of external users. So these are the examples of management reports: job cost sheet, production cost sheet, age analysis, ratio analysis, and budgets. There are many more internal reports, and these are the basic main components of financial statements: profit and loss, balance sheet, cash flow, statement of changes in equity. Okay, now we have a clear understanding about the bookkeeping and the accounting and the difference. So let's move on to our next slide. Here I have clearly showed you the difference between accounting and bookkeeping. So if the accounting is the whole circle, bookkeeping is a part of it, but it is the base of the whole process, because if we don't have any record, we don't have anything to analyze, so we don't have anything to communicate to the users of financial statements. So bookkeeping is the base of the accounting process. Now we see the purpose of accounting. So the basic purpose of accounting is recording financial transactions to keep a track on the financial history of a business. So that is the main purpose of the accounting. So what is the next purpose of accounting? It's financial reporting. Why do we need financial reporting? Because financial reporting are necessary for the stakeholders or the users of the financial statements to make their decisions. That could be internal users or the external users. I will discuss this thing later in detail. Next purpose is decision making. So by using the financial reports or the management reports, the management can assess the profitability of products. They can identify the cost saving opportunities and plan for the future, and they can do many decisions about the business. So on the other hand, external users like investors, creditors can assess the financial health of the organization and see whether they are going to work with the business anymore, or whether creditors can assess the financial health and see whether they will be able to recover the money that they have lent to the organization. So internal and external stakeholders can take many decisions based on the financial reporting. Okay, another important purpose of accounting is to have monitoring and controlling system for the business, because when you have the accounting, the management can see and monitor the financial health of the organization and the performance of the business, and they can identify the areas where the improvements are needed, and they can improve the implement the control system for the business operations, which is really important. So by having a proper accounting system, the business will be able to have sound monitoring and controlling system. That is also really important. Another important purpose of accounting is to meet the compliance requirement. It could be tax compliance, legal compliance, or any other applicable regulatory requirements based on the country or region where your business is incorporated. Now let's see who are the stakeholders. Stakeholders are the parties who are interested about the organization. So they can influence or be influenced by the organization's decisions, performance, or overall well-being. So basically, stakeholders can be divided into two: internal stakeholders and external stakeholders. So internal stakeholders are within an organization like management and employees. So external stakeholders are outside of the organizations, like owners and shareholders, potential investors, customers, creditors, lenders, government entities, and general public. Now we'll see why are stakeholders interested in the business. First, we'll see why different types of internal stakeholders interest in the business. Management is interested about the business because they want to make strategic decisions such as planning and setting financial goals, identify cost-saving opportunities, and monitoring and optimizing overall financial performances. Why are the employees interested about the business? Because if the business runs smoothly, they have good job security and they have compensation plan as well. So they are so interested about the business. Now we'll see why different type of external stakeholders are interested about the business. Owners and shareholders are interested in the business because they want to see whether the business has earned an adequate return on their investment, and also they want to analyze profitability and the growth potential, and they want to take decisions about whether the present investment to be increased or decreased or retain at the same level. For these purposes, the owners and shareholders use financial information of the business. So potential investors also use the business information to see whether it is worth to make investment in this business in future. Creditors are interested in the big business because they want to see whether the business be able to pay its debt as they become due, and also they want to see whether the credit terms that they have given to the business should be tightened or relaxed. From the other hand, the lenders are interested because they want to take decision on whether the loan be granted to the business or not. Customers are interested because they want to evaluate the financial stability of the company for them to work in future, and also they want to assess the ability to meet future contractual obligations, and they want to gauge the potential impact on product and service quality of the organization. Government entities are interested in the business because they want to ensure that the business is complied with the regulatory requirements that have been enforced by the government. So as general public, why are we interested about a particular organization? Yes, we want to assess the company's contribution to the local community and to understand the social responsibility and impact on their business to our community. So these purposes, as general public also, we are also interested about a particular business. So now we have discussed who are stakeholders and why they are interested in the business. So I think these two topics are clear to you now. So let's move on to our next slides. Okay, now we'll see what are the categories of accounting information. Basically, there are two categories of accounting information. One is managerial accounting, the other one is financial accounting. So these categories have been done based on who use this information and for what purpose this information are being used. So first we'll see what is managerial accounting. So managerial accounting or management accounts are used by internal users as we discussed, like management and employees of the organization. These reports are prepared based on the needs of the internal users. It could be daily, weekly, monthly, quarterly or biannually. So management accounts include budgets, weekly, monthly, quarterly or biannual financial statements, cost analysis, inventory analysis, age analysis, or operational reports likewise. Now we'll see what is financial accounting. So financial accounting is designed for and used by external users like lenders or creditors, debtors or customers, government institutions, owners or potential investors. Likewise, we have already discussed about this in our previous slide. So basically these financial accounts are prepared quarterly, biannually and annually. These financial accounts include financial statements such as profit and loss account, balance sheet, cash flow statement, statement of changes in equity and other applicable notes to the financial statements. So these are the basic two categories of accounting information. Let's move on to our next slides now. Now we'll see what is a business. So business is an organization or entity engaged in commercial, industrial or professional activities with the primary objective of making profit. So there could be other objectives as well, but the primary objective of any business is to make profit. So there are various forms of businesses: sole proprietorship, partnership, limited liability companies or listed companies, non-trading or non-profit organizations, and cooperative societies. Now let's see the characteristics of different forms of businesses. First we'll see sole proprietorship. So sole proprietorship is owned and operated by a single individual. So all profits go to the sole proprietor. So in the case of bankruptcy, the sole proprietor is responsible to sell even his private properties and repay the debts. So his owner has the unlimited personal liability for business debts. Next, we'll see partnership. Partnership is formed by two or more individuals. We call them partners. So partners have unlimited or limited liability depending on the types of partnership. So profits are shared among partners according to the partnership agreements. Companies, private or listed companies. So private companies owned by individuals or group of shareholders, whereas listed companies have shares traded on a stock exchange. So they have right to issue shares in the stock exchange. So management decisions are made by directors and executives. So shareholders have voting powers on significant matters. Shareholders have limited liability, generally restricted to their investment. So dividends are distributed to shareholders in listed companies, and in private companies, distribution is at the discretion of the board. Non-trading or non-profit organization. This organization exists for purposes other than making a profit, often focus on social, charitable or educational goals. Basically, their goal is the well-being of the community or the society where they operate. governed by a board of directors or trustees. Decision making involve the board and may include volunteers and staff. Directors and members typically have limited liability. Any surplus funds are invested in the organization's mission rather than distributed to owners or members. Next type is cooperative society. Cooperative society is owned and controlled by its members, who may be customers, employees, or producers. Democratic governance with members participating in decision-making processes. So members usually have limited liability. Profits are distributed among members based on their participation. So these are the basic types of businesses. So with that, I'm going to conclude my first video on basics of accounting in simple language. So in this video, I have covered what is bookkeeping and accounting and their difference and the purpose of accounting and different types of stakeholders and their purposes and categories of accounting information and different types of businesses. So if you have any question on the topics that we have discussed in this presentation, please comment them in the comment section. I will answer to you. So my objective is to give you a layer base for the accounting and financing field. So what if you have any question, please mention them in the comment section. So I'm planning to do another video on accounting equation, financial statement components and double entry rule and how do transaction impact on accounting equations. So we'll see you soon in my next video with these topics. Thank you for joining with this video.